What's going on, everyone? Welcome to the February trading month recap. In this video, I'm going to focus on things to kind of recap every month, what I think everyone should be focused on. I'm going to recap some of my trades and just kind of dive into them a little bit just to show you the proper way of recapping, and then go over certain questions some members had and go over their trades so you guys can kind of understand the proper way of actually going about this. Now, a few things that I want to bring up is number one, when you start trading, right? One thing that I've noticed that a lot of people don't do and a lot of people should be doing is actually journaling. Now, there's many different ways you can journal, many different ways you can actually go about this. That's up to you. But I just think going through certain stats that are really going to provide you insights is going to help you as a trader. Right, so now these are some of the things that I think everyone should be recapping, and I'm going to break them down. And if you haven't done this for February, I would highly recommend that you do it. Same thing with January. And if you haven't done it for then and you're just starting out trading, these are some things, like I said, I highly recommend that everyone starts doing. Now, with that being said, there's something I want to break down about trading first. And this is for a lot of people that I've noticed are having issues and are having a hard time kind of adjusting to the market conditions and adjusting to figuring out what they need to do better, right? So, let's take a typical situation. This is where typically someone starts. And, I ask a lot of people, or people come to me sometimes and they say, hey, Umar, I've been trading for 2 years, or I've been trading for a year, or I've been trading for 8 months. I'm unable to find consistency. Now, these time frames, 2 years, 1 year, 8 months, whatever the case is, would make sense if during that time period you can actually, define in that zone where or how many days you're trading, what your edge is, what your trading style is, where you're making the most money, where you're losing the most money, how you perform after multiple losing days, how you perform after multiple winning days, what's your average win day look like, how much risk are you putting out, what's a comfortable size amount that you can trade with and you perform well under. So there's a lot of questions that need to be answered. Now, if you don't have any of these answers to these questions, even if you're trading for 2 years, 10 years, 15 years, it doesn't count. Like, that's not, to me personally, that's not real trading. I think you start trading the day you actually start going into your reports, your insights, and start, recording the process. Now, there's a lot of traders within our community and, a lot of traders out there that I can use as a reference. One person that comes to my mind is Jay. I'm pretty sure some of you guys probably know him. I use him as a reference. He comes to my mind right away because he actually really, like, if you ask him, hey, last year in July, how was your trading day? He has like a whole notebook. He'll go in it and say, hey, in July, I lost $32. These are two stocks I traded. This was the market conditions. This is what I did. This is what I think I did right. This is what I think I did wrong. But going back to it, I know how I could have improved. So he's able to go into that data and kind of analyze himself. Now, trading, right, when you guys start, and even for people that are trading, because, lately certain people have messaged me and said, hey, I've been trading for, X amount of time period. I'm not able to find consistency. It goes back to the same thing. When did you start recording the process of your trades? When did you start recording not just the technical side, but also, in my opinion, the emotional side of how you're responding to certain events, how you're responding to, your own emotions, how you're responding to when you make money, when you lose money, right? So that's number one. Now, going into that, I think once you start going into deeper insights and start holding yourself accountable, because that's another phase too, because obviously reporting and, going into your insights and reports is number one, but then actually following through and making sure, saying, my consistently good size is when I trade from 2 to 3K per position. Every time I go to 5K, I start losing money. Right? So that's where I think you need to start implementing. Now, if you record the process and you implement the process, most of the time, I promise you're going to start doing well. But if you can't do one or the other and you can't combine them together, you're not going to do well, in my opinion. So that's what I wanted to start this off with. So if you're really taking trading seriously, you should have this journaled. And now that goes back to certain people that have messaged me lately and said, hey, I've been having a hard time with this. I've been having a hard time with that. I've been trading for 5 months, 6 months. And I saw some messages and I replied to them. And my response to that is, if you don't have your full journals or your full trades outlined on what you did right, what you did wrong, then you're not taking this serious. And up until you take it serious, you're not going to see results and you're not going to see improvement. Now, this is where I'm going to go into things that I think everyone should be really focused on. I'm going to break them down, then I'm going to show you examples, like I said, and then I will jump right into certain questions you guys have and certain questions people have posted in the online community, and I'll kind of dive into that. So let's get started. Number one, first thing, I'm going to break it down in 4 different concepts. The first thing that I think everyone should be focused on are the basic, out of February, how many trading days did you have, right? Let's say in February, there were a total of 20 trading days. It goes down to, okay, out of the 20 trading days, how many days did I first, trade, right? Now, if there's 20 trading days, hypothetically, I didn't even know how many trading days there were. I actually want to kind of see. We're looking at what? 1, 2, 5, 10, 15. Yeah, we actually have, perfect. We have 20 trading days, right? Oh, one day was closed. We had 19. So we had 19 trading days. So let's say when you go into that, you're like, hey, I have 19 trading days. Now, out of those 19 trading days, obviously everyone is not showing up every day. Some people maybe have work, school, something happened. Maybe you didn't wake up or whatever the case, maybe you didn't trade. So your trading days out of the 19, or maybe let's say, I don't know, hypothetically 17. So you showed up 17 times. Now the question is, out of those 17 times, how many days did you have winning days? How many days did you have losing days? And also another one you can add is, how many days did you have days where you were cash, right? And I think this is very important because it could come down to something like, okay, I had, 5 winning days, 5 losing days hypothetically, and then I had 7 cash days. And I think a cash day, especially for the month of February, which was a pretty tough month, is very important, right? Being able to have a cash month, being able to showcase that I was able to sit on my hands. Now, if you go through a tough month like February and you had no cash days and you were red for the month, that's a problem. Now, if you're green for the month and you're doing very well, and I know a bunch of traders that are, and you have no cash days, that's okay. That doesn't matter, right? As long as if you're doing well, great. But, for a lot of people starting out, I think having cash days and knowing when to sit on your hands is very important. Then it goes down to the next set of stats. Now, like I said, let's say you have 7 winning days or 5 winning days and 5 losing days. How much are you making on your winning days? How much are you losing on your winning day, on your losing days, right? So on your winning days, you might be making $500 per day. On your losing days, you might be losing $1,100, right? Now that becomes a problem. And these are just overview stats that I think you guys should start off with. So it's like, okay, on my winning days, I'm making 500. On my losing days, I'm, losing 1,100. Now it goes down to the quantity of trades. All right, on my winning days, I'm taking 2 trades. On my losing trades, I'm taking 7. Right off the bat, what's the red flag there? The red flag there is you're over trading on these days, right? Now, even before that, I think certain things that some of you guys should have outlined is what is your max loss amount for the day, right? So depending on your account size, everyone is going to vary here. Depending on your account size, you need to know where do you have a cutoff limit. What's your account size? And this comes in rules and regulations that you have to kind of set for yourself. I think if you don't set this for yourself, you're going to make things very, very complicated and very hard for yourself. So you need to actually set that up. Now, once that's set up, you have to go into the next stage of saying, okay, if my max trading day loss is, I don't know, $600, right? I shouldn't be having $1,100 days where I'm losing $1,100, right? Especially if I had, my average losing day is $1,100. That's too much. There's a problem. There's a disconnect. So right away, looking at that, you have to say, okay, I'm losing way more than my initial plan. Why am I losing so much is part 2. But part 1, I'm not even following my plan. So everything else right now is secondary. It doesn't even matter. So that's one thing that would have to be worked on, right? Now, second could be, you could say that my max losing day should be at hypothetically 600, right? But when I go through my trades, my average winning day is 200. So right away, it's like, okay, I'm putting out so much risk. I'm barely making any money back. What's the issue with that? What's really messing me there, right? So that's another insight that I think, people have to kind of dive into. Then you kind of go into your trades. And like I said, I'll show you guys examples. How many trades did I take? You have trading days and you have trades. How many were winning trades? How many were losing trades? And that's where, you're going to get your win percentage. And win percentage, to me, honestly, is kind of the least important thing. I know people that have a 70% or 80% win percentage, but guess what? They're red. And win percentage, like I said, does not mean much. You can have a 95% win percentage, right? And you can still be red. There's people I know that have a 40% or a 35% win percentage, and they're massively green, right? So win percentage is not important. I'll talk about what's important in a bit, right? Yes, obviously you want to have the most amount of winning trades, but depending on your system and depending on your risk that you put out, in some situations, if you have a system where you're putting out very limited risk and you're looking at very high probability trades, right? And I don't want to say high probability trades, but trades that have a very high R multiple or very high profit point, then even if you have a 40% win ratio, it doesn't matter. Yes, you can dive in and cut out the other 60%, but in a system like that, you're going to be taking a lot of shots. You're going to be taking a lot of trades that are potentially going to allow you to make that money, right? And what I mean by that is, if you have a system that you have, let's say, a 4-to-1 ratio, right, where you're making $4 and losing $1. In most systems like that, people are taking a ton of trades to, really make money, because the more trades you take, and if you have a system that really works, your gap in profit and losses are going to start separating. But now if you have a system where, you have a 2.5 or a 2-to-1 ratio, you can't really win with the 30-40% win ratio. You got to kind of increase that and take higher quality trades, right? So it kind of dives into that. Then it goes into, okay, your average winning trade, your average losing trade. What is my average winning trade? What is my average losing trade, right? You're going into the averages of those trades. And I'm going to go a little bit deeper in a second. Then you have this stat. This stat, I think, is one of the most important stats out there. If you're not tracking this, I think this is where things get messy. So before every trade that we take, we have a planned R multiple or planned risk reward ratio, and then we have a realized R multiple, right? Our realized risk reward ratio. So hypothetically, in simple terms, let's kind of break this down, right? Let's say you get into a trade at $10, right? You put a stop at 9. Right? If you put a stop at 9, your R multiple on this, or your risk on this trade, is 1, right? -1 R, or you're risking about $1 on the trade, right? Now, if this trade goes well, right? Let's say you're like, hey, I want to sell this at potentially 13. When I got into the stock at 10, I think it has potential to go to 13. Your potential R multiple is 3R. You're risking 1 to make 3, right? So you're looking at a 3-to-1 risk reward ratio. Now, the problem that happens in a lot of situations is, and I've spoke about this before, it's very important to understand. There's 3 components of a trade. There's the pre-trade, right? Then there's during the trade, and then there's the actual trade. Now, this is what happens during pre-trade. You do the analysis, and you're like, wow, I have a 3-to-1 risk reward ratio. I'm risking $1 to make $3. Phenomenal. During the trade, maybe you sell at 11, maybe you sell at 10.5, whatever the case is, and you actually get a 1-to-1 risk reward ratio. So for example, let's say you set this trade up, you're gonna buy it at 10, put a stop at 9, sell at 13. I get it, that's the plan we have, and obviously things don't go as planned. Stock goes up to 11, you immediately take profits. So the issue that you had here, when you kind of assess the trade afterwards, is you sold at 11. When you sold at 11, what happened? Was it a good trade where the stock actually went down afterwards, or did you miss out on profits, and why did you sell? Now, this is where you go deeper into your trades, right? You're like, okay, I sold at 11, and this should be done, in my opinion, on every single trade that you guys take. Hey, I sold at 11, right? And as I sold at 11, this stock now went to 13. So my actual realized risk reward ratio on this was actually a 1-to-1, right? Now, that's not an issue when you look at one trade overall, but the problem, in my opinion, it becomes a problem when you start going through a ton of trades and you're like, wait, hold on. My projected risk to reward ratio is 3-to-1, but I'm actually getting a 1-to-1, right? That becomes an issue. Now, if you look at this from a different perspective, from an R multiple, which is kind of the same thing, it is the same thing. It works like this. If your R multiple is 1, which should be 1, every trade, the outcome should be -1 R max. What that means is, what this is defining is, if you get in at 10 and you put your stop loss at 9, your R multiple is at 1. If you go and you get in at 10 and you put your stop at 8, and I'm talking about where you put your stop, right? And right when you put your stop, if it's at 8, your R multiple is still at 1. Now, the problem becomes when you put a stop at 9 and you actually sell it at 7. Now your R multiple, instead of it being -1 R, it's -3 R. So you're losing 3 times as much as you're potentially making, right? Now your loss, that's where it becomes a red flag, where you're like, okay, I'm not following a plan. So even if you want to keep things simple and not really focus on the upside, I think one good way to approach this is every trade you take, stocks or options, you should kind of give yourself a heads up that, hey, if I buy this premium at 10, I'm going to sell at 9. then you kind of track, hey, am I or have I actually been selling it at 9, or have I or am I actually selling it at a higher price point? You know what I mean? So you want to start understanding that aspect, and then obviously looking at the pre-trade and looking at the after trade. And I think this right here, in my opinion, is going to give you a lot of insight on your trading and on the risk you're putting out. Then you can go into your max loss, your max gain, and kind of learn from those trades. Same thing with max percentage gain, losing gain, just diving into more stats, but I'm just keeping it on face value and what to focus on. Now you go into the more advanced stats, right? This is where you as a trader should really be digging down and diving into your trades. What setups, what mistakes have you made on days and trades, right? So a setup as simple as, it could be something as simple as, okay, I sold too early, right? Or I didn't follow my plan, or I didn't have a setup. Even if you made money, you gotta note these mistakes down, right? Market conditions weren't the way I wanted them to be. Whatever mistakes are there, or maybe I didn't have a plan for this trade. I chased it. I had FOMO, whatever the case is, and then you dive into those days and you dive into those trades. You go into that full trade, right? Then what setups did you trade? Now, as a trader, every trade you take should be outlined under a setup. Is it a continuation play? Are you doing a midday breakout, pre-market low of the day, pre-market high of the day, a VWAP bounce play? Like, what is your setup that you're trading, right? You need to identify that setup. Now, this is a very tedious process, and it's also a very interesting learning component, in my opinion. Now, something about this that I want to touch on, when you guys trade setups, right? And I'm pretty sure some people that have been trading for some time noticed. Let's say you're trading, a continuation play, right? That, hey, if a stock, breaks out of certain levels with a relative strength and it has strong volume, this stock has potential to go up higher, right? So every time a stock breaks out of a key level, I see relative strength, I see strength in volume, I think the stock can make a higher move, and that's where my interest kick in. That's step A. Now, you have to keep in mind, when you're trading a lot of these names, it goes down into the market conditions as well, right? The market conditions can go into looking at how is SPY performing, how is NQ performing, what is the volume in the overall market. Because now if the market is flat, or the market is weak, or the market is dumping, you might see a nice continuation play, but that continuation play will not have the same effect opposed to a day where the market is rallying and the market is looking strong. So you need to be able to compare those setups with the market conditions. Now, for people going into options or trading options, what you want to keep in mind is, when are you taking option trades and when are you making the most money on them? Hypothetically, if you trade on Friday or Thursday, you have to understand the same move that's done on a Monday. Let's say Apple makes a 50-cent move on the stock on a Monday. That might move the option play up 5%. But a 50-cent move on a Thursday or a Friday may move the stock up 20 to 40% or even more. So you have to also factor in these sets of data for people trading options. That's where it gets a little bit more complicated, where, okay, we have data Thursday. If something reverses on Thursday, especially for options, I'm going to take a bigger hit than usual. So if I'm going to take a bigger hit than usual, I need to make sure that I'm actually well protected and I know how I'm assessing risk. And I think a lot of people that trade options, like I'll give you an example of somebody in the community. I think he had about a 70 or 80% win percentage, and he would do very, very well. But that other 20% of losing trades is what would cause him to give up all of his profits plus some more. Why? Because the 70 to 80% trades that he would make money on would come in on, let's say, Monday through Wednesday, right? The same, let's say, 1-point move that he's playing with. Now, when it comes to Friday or Thursday, right? You go to Thursday and Friday, immediately the same person is losing 1 point on the underlying stock or underlying asset, but the option is losing, let's say, 30% or 40% compared to their 10 or 20% on average. And also with a high IV or a high VIX is also affecting their option plays. So as an option trader, you kind of got to go a little bit deeper and assess, okay, does it even make sense for me to take this option trade? Like, I noticed one thing a lot of people do wrong is when they're trading options, and this applies primarily to options, is let's say a stock breaks out of a key level, makes a move up, makes a move up, makes a move up, and now people are entering. Now you have to understand, if you're scalping options, getting in at this level on a stock doesn't really matter much, but on an option, IV jumped up a little bit, premiums got jacked up because of that quick move. So if you get in and the stock pulls back, because of how inflated the premium got in those 3-4 minutes, that pullback is going to destroy premium. So your risk from going from, let's say, 5 to 8% or even 10% max sometimes doubles. So now you have a choice to make, where do I cut my losses at the 20%, or do I hold and hope that this reverses? And if it doesn't, I'll now take maybe a 25% loss. And for me to recoup this, I need to take 3 or 4 other good trades. So right off the bat, as an option trader, you kind of get that disadvantage by not knowing what to pick and what not to pick as a trader. And I think that's very, very important to kind of assess and understand. Right. And then, like I said, what market condition setups work best, what you trade under the best, and what setups work under the best. And that's very important to understand. And this is going into all your trades. Do they have a setup? If your trade doesn't have a setup, that becomes a mistake, but I wouldn't kind of factor that into this. That's more so gambling. Then I think another important component that I think a lot of people tend to miss, and it applies a lot with option traders too, more so for option traders, average size. Right? What is your average size you're taking? What is your average winning size? What is your average losing size? Now, I think this is very important. I kind of want to copy this and post this here. I think this is very important primarily because people get lost in the actual size they're trading. I think people kind of mess up with size, right? And I think with options, it messes up because you might be trading one contract, and you're like, oh, I'm trading one contract, I can increase my size to 2 contracts. And what people don't understand is, let's say you're trading Amazon, and let's say you're trading a certain contract. That one contract may cost $3K. Now, the moment you go from one contract to 2 contracts, you're immediately looking at $6K. So your position increased by 100%. So that same move that you'd maybe cut your losses at $200 on is now costing you about $400. Now, typically that's way too much of a jump in size, which is why I tell people, yeah, focusing on premiums is great, but the main number to focus on is the actual dollar value. How much are you losing on a dollar perspective? How much are you risking on a dollar perspective? How much cash are you putting out, right? The risk could be the same, but you have to understand, more cash put out or more size put out on a trade, the fluctuations are going to cause a bigger hit to your overall account. And a lot of people can't react to them well, and that's normal. That's all human psychology, and it's normal. It's not just happening to you. It happens to everybody. But you need to understand, what is my average size? Where do I make money? Where do I lose money? So if you take a situation of someone, let's say he or she is trading with 2K per position size, right? Or someone is trading with 20K. And you have to kind of see, okay, all my trades that I make money on, I'm making money on 20K. But my losing trades, it starts happening the moment I go to 30K or plus. Why is that? Oh, obviously because I've increased my position by 50%. Same thing, going from 2K to 3,500. That's almost about a 100% increase in position size. So you need to kind of understand that in looking at each one of your trades and looking at it from a cost basis, right? How much is it costing me? How much money am I putting out? And based on how much money am I putting out, how much is that really kind of affecting my overall trades, right? So I think that's very important. And I think everyone, if you haven't done this and you don't know the numbers and you don't know the stats, I would highly recommend that you take time out today or tomorrow and go back to this. And once you do kind of figure all of these stats out and know your setups, and like I said, some things you're not going to understand, you're not going to get, and that's the whole part of the learning process. But when you do go back, the next step comes into setting rules, right? Let's say rule number 1, that, hey, like for example, me, if you guys saw my trade recap today, I took the Apple trade, I made $70 on it. And, I wasn't even going to trade, and just the market conditions based on how I want to trade did not align. So even though the market went up, even though there were some good plays, I was still able to say, you know what, I'd rather be flat, make $70 and make 0 than to kind of not follow my plan, not follow my rules and guidelines. Because if I break it today and I kind of adjust, then it becomes easy for me to kind of constantly keep breaking that habit, So you want to set those rules, like I said. Those rules could be something like, hey, I've noticed that my average size where I make money is 2K. I'm not allowed to increase any position for I'm not allowed to go above $2,000 on a position until I show 30 days of consistency, right? Not like this is the thing that happens, right? Not after 4 days, not after 1 week, not after you had two good trades. After 30 days. The reason I say 30 days is because the market, and this is going in January, the market in January, in my opinion, was not that hard. right? Compared to February. So when you start having 3 or 4 good trades, you start saying, "Oh, I'm the best trader," blah blah blah, and you start thinking about all this crazy stuff and how you're this phenomenal trader. And the moment the market starts turning, those bad habits now carry over into that. And if you carry those bad habits into a bad market or a tough market, you're going to get burned, which is why you need to keep that consistency. And it goes back to, let's say, tomorrow, Tuesday, Wednesday, Thursday, Friday, we have a great easy market. You start increasing your position from 2 to 4K to 6K. You already created a bad habit and you already increased too much right off the bat. Next week, let's say the market is bad. You're going to carry those bad habits over, and immediately what happens to some people is they give up all these profits plus more, and then you kind of put yourself in a tough spot. So going back to what I was saying, number one, you want to start making rules. You want to start making rules such as what do I need to focus on? What is the main thing that me as a trader I need to kind of dive into, right? And like I said, with size, it plays a very big role, right? What is my average winning size? Some people maybe don't have this stat yet because they're new or they're still trying to figure stuff out, but I'm talking about people that kind of have certain stats. So if your average size is 2K, like I said, and you're making money on the 2K, great. Keep my average size at 2K. I don't care if a Tesla contract is 5K, guess what? I cannot touch it. I don't care if I have 50K in my account. I don't care if I have 100K in my account. I am not allowed to touch it. And that's where discipline and consistency and following your plan and not allowing yourself to break rules kick in. Now, once you're able to achieve this consistency and you're able to follow that one size aspect, that itself, in my opinion, is going to make a big difference to your trading. Second, it's saying, okay, what setups did I trade last month? Okay, let me go through all of my 30 trades or 40 trades or 100 trades. How many trades? Each trade individually, what trades made me money, what trades didn't make me money. Okay, continuation plays. Okay, on the days I made money, let's take a step back. Let's say out of 30 trades, you had 10 where you traded continuation plays. Okay, out of these 10 continuation plays, 6 made me money, 4 I lost money. Okay, great. Let me look at the market conditions on the 6 that made me money. Let me look at the market conditions on 4 that I lost money on. That's where you start looking at market conditions. That's where you start now learning better as a trader. A lot of this, guys, is muscle memory. Like, you can't just wake up one day and become a good trader. It requires, it's kind of like, people that play sports, basketball players, football players, and so on, they watch a lot of film, right? They watch a lot of film because when they're in those tough, tight moments as a trader or as a professional athlete, they're able to slow everything down, and that muscle memory can kick in and they can kind of understand everything from a wider perspective. Same thing goes on for a trader. As a trader, you want to watch as much as film as you possibly can, and that film comes down to your trading, how you trade, how you respond. And one thing I've said before that I highly recommend everyone to do is record your screen, right? If you record your screen and you go back to your trades, you're going to say, holy shit, why did I take this trade? This trade did not make sense. You know what I mean? So that's where that kicks in on understanding market conditions, the setups you trade, what mistakes you made, and you're going to start seeing a better perspective on that once you start actually factoring that in. Same thing goes into looking at how much risk you put out, right? How much you actually made on certain trades, what you actually risked, and how much you actually really returned based on just the risk amount. Like certain stats, right? And I'll show you some of my stats and I'll show you what I mean. You can show me a trade where, you made $5,000, right? That could be your biggest trade. And you can say, wow, I'm such a good trader. But then your other 80 trades, you kept losing, 400, 800, 600, 500, and then your other winning trades, you made $30, $40, $60. It's kind of just showing me you had one lucky trade, and that one lucky trade is what gave your account equity one pump, and then you slowly started bleeding it away. And that's, like I said, that's where bad habits start kicking in, you know what I mean? Now, let me go in some trades and let me just start breaking stuff down, right? So I have some trades here, just to kind of break it down. Now, a few things that I think don't matter. I don't think a net P&L matters. Now, the reason I think that a net P&L doesn't matter is because this is not going to allow you to improve your trading. Now, there's a few things that you should focus on. Number one is your return on investment, right? Now, if you look at certain trades where, let's say, you made hypothetically 15% or 45%, that 45% would be a lot better than making, let's just say this trade right here, I made 50K. And making 50K returned me a 2% return. Out of both of these trades right here, in my opinion, are a lot better, even though they generated less money because of the return. because of the return that they were able to generate. Now, this is for swing trades. It's not for day trading, so it's a little bit different. But it's the same exact concept, right? Now the concept kicks into just going into first your net percentage. Now in every position, what I like to track and what I like to look for is I like to look at maximum profits and minimum profits or maximum loss. Now what this allows me to see, and I think this is more so like an emotional thing, and it's gonna really help you elevate your trading. Is let's say you take skills, right? Now on this skills trade, and this is kind of wrong. I gotta adjust it, but anyways, on this skills trade, let me actually find one that is right. Okay, let's take this. Let's take this Fubo trade, right? So on this Fubo trade, it's saying, okay, you made about a 17% return, which is great, right? Now, it goes down to a few things. Number one, what was the setup? You obviously want to have setups. What mistakes did you make? On every trade, you can have mistakes. Then you go into the overall trade, right? Okay, I made about $7,000. That's great, right? The end result is always great, but we don't care about the end result. I want you guys to make a habit where you're not analyzing yourself based on the end result number. I don't want you guys to sit here and say, this was a great trade because I made $7,000, right? Or this was a great trade because I made 45%. That's not the way I want you to analyze it. The way I want you to fully analyze it is going in between the trade. And that's where you're going to learn the most, and that's where you as a trader, you're going to allow yourself to elevate the most. Now, what I mean by going in between, every single trade you guys take, you guys should be tracking certain stats. And those stats are, okay, when I took this trade, right, it's kind of like, let's say you buy a stock. From the moment I bought to the moment I sold, my exit point, how did the stock move in between and how did I react, right? So in this situation, yes, you walked out making 17%. But based on the moment you entered and the moment you exited, you could have made $10,000. And the lowest it went was 1,000. So basically what that's saying is your entry price is at 40.25. So based on your entry price, it dipped about 1 point below, but it moved about 10 points higher, but you made 6 points. Now, the reason, in my opinion, that's very important to track is because when you track those stats, your risk-reward ratio when you're in a trade adjusts. And I think a lot of traders kind of mess that up, right? So let me draw this out. Let's say you buy a stock at 40. Okay, let me put this number right here. You buy a stock at 40 and you say, hey, I'm going to put a stop at 39. I think this stock is going to go to 50. Okay. Now, like I said, on paper, it looks great. Once we take a trade, things mess up and things adjust. Now, if this stock goes from 40 to 45, right? And now what you as a trader need to understand is right now you are up 5 points on this trade, right? You are looking to make 5 more points, right? So you can lock in 5 points right now. And this is where I think trading becomes a little bit, not complicated, but for some people it gets a little bit weird, right? Because the question that you have to do, or the thing that you have to do during this time, is you have to be able to adjust. Our job as traders is to manage risk. And managing risk comes down to, okay, I'm risking, I was originally risking 1 point, but based on where we are right now at $45, if I keep my stop at 39, I'm risking $6 to make 5. That does not make sense, right? And I've noticed so many people that are in great trades and they're in situations like this and they get confused. They freeze up. They're like, oh man, I want to make more money, but I have my stop. But when you think about it, it doesn't make sense, right? And that's what I'm trying to show with this, where, sometimes it's better for you to say, you know what, I do want to maximize my full trade, but I need to understand, I need to realize that I need to switch up my game plan at this moment, right? I'm up 5 points. I'm looking to make 5 more points. Is it worth it for me to keep my stop at 39? Obviously, the answer is no. I'd rather have you always take profits here or lock in half than to try to capitalize on the last 5 points. Or you can move up your stop. Now, if you don't know where you're going to move up your stop, or you don't understand that aspect of trading, or understand where you can place it, my advice would be to just exit or sell 1/3 or sell half of your position. And that's why if you guys notice some of the positions I've been taking, I always say I took half off, or sometimes I would take a starter position just for that exact reason, right? That's where your risk reward ratio adjusts. So in some trades, right, if we look at certain trades, you might see like, all right, in this trade, I ended up walking out making, 6,000. Like I said, some of them are not right. You can see net P&L. Some of them aren't right. I know that. But I'm just showing you just some examples. It needs to be adjusted. But anyways, if you look at, let's say you made 6,900, great. You made about $7,000. You caught about 7 points, let's just say. But now at the top, there were 3 points left. You left some money on the table. Now, obviously, I'm not saying that you want to make money at all times. But what this is implying is that at one point, your P&L for this trade was at 10K. You were up about 10,000 bucks. You walked away making 7,000. Now, this looks great as a trader where you're like, wow, I made $7,000. Trade done, move on. But now, what if you can go into that trade and say, you know what? Why did I leave $3,000 on the table? What happened? You know what I mean? Like, did I miss it? Did I get greedy? Did I think it was going to go up higher? Did my risk-reward ratio make sense? Because now, if you gave up 3 points, right, you should have been risking, in my opinion, 1.5 points max for those 3 points. So it's like, did I risk 1.5 points during the trade? And that's where risk management really becomes, very interesting. And that's where managing your position, in my opinion, becomes one of the most important things. Now, if we go to another trade, XL, this was, if you guys remember, XL was crazy. But let's just say we go into JMI. Same thing with JMI. Okay, you walked out making 2%. You walked out making $676. You go on paper and you're like, okay, I made $676. Okay, great trade, phenomenal trade. Okay, but I was up 2,500 at a point. Why didn't I sell? So I gave up about 2K. Why did that happen? Now, in some situations, it'll make sense. I get it. But in some situations, it won't. Same thing in this trade. Let's say you go to XL, right? You say, hey, I made 500 bucks on this trade. I made about 1% on it. But I was down about 3,500 at one point. Now, this also becomes a red flag, in my opinion, because you can have a trade. Now, if you start seeing too much of this, in my opinion, if you see something where, your maximum losses were at 3,500, but you made 500, and you see the same pattern happen over and over again, now it's like, okay, wait, I was down from my entry point. I was down 3,500. But I made 500. So technically, I still gave up a lot of money on this trade. You know what I mean? I gave up a lot of money on this trade because I'm having major drawdowns as a trader. And the issue with that is, maybe your stop is too wide. Maybe you're not stopping out. Maybe you're holding on to positions, and that's causing you to lose money. But this is a bad habit. Even despite this trade, and I know what happened with this trade. This was okay, only because I was putting out about 6K worth of risk. I knew that with this trade, even though I cut it short. But let's just say that wasn't the case. You look at this trade and you're like, okay, well, 3,500, I made 489. And let's just say I didn't know how much risk I was putting out, and I was just looking at the overall trade. It's like, okay, this is a red flag. Now, if it happens 10, 20, 30 times, it becomes a bigger red flag, because it's like your risk amount, or the amount you were down, is 5 to 6 times more than your actual profit. So yes, you're coming out on top of the trade, right? At the end of the day, you're coming out green, but your drawdowns on these trades are massive, where if you have these 2-3 major drawdown trades, you'll actually end up hurting yourself and blowing your account. And that's what happens with a lot of people. Where it'll be like, oh, since I held and I built out one bad habit, that one bad habit is allowing me to continue trading, but that's how you blow your account. So these are some stats, like I said, everyone should be tracking. Same thing with losses. Same exact concept, just looking at how you traded or how you handle certain losses, what happened with stops. All these 3 trades I spoke about before, all of them, the stops kind of kicked in afterwards. I had a stop for SOS. I had to stop at a limit. Stop didn't kick in. Hurt. Like this was a terrible trade. This trade should not have been, like, these 3 trades right here should not have been this bad, right? If you guys remember SOS, I had a stop at 10. Exit at 577. My stop at 10 was a stop limit, didn't kick in, and it dumped a lot lower. And because it's a swing account, I wasn't actively watching this. Same thing with XL, was at 1850, took 1.5 points loss more than I should have. And going into NNDM, took about 1.5 points loss more. So when you do the math on this, terrible trade. I don't care. This I don't care about. I care about where, following your plan. My stop on this was at 15, right? About 14.8. So I lost about $1.06 more on this. Same thing with this, about $1.05 more. On this, I lost about 5 points more than I should have, right? So that increases the losses tremendously. And that was only because of not managing the position the right way. And like I said, this is a swing account. So with the swing account, I wasn't actively on it. So that's where that has to be kind of looked into. Okay, next time, since I'm not actively managing it, instead of putting a stop limit, just put a stop. So if it gets there, I'll get stopped out and not try to get filled at a certain point. And you avoid the gaps downs and gap ups and all those things. And same thing with this. On SOS, it's at one point you were up 8,600. You lost about 26. So in reality, you lost about 34K. Not really 34K on paper. You lost 2,600. But at one point you were up. Why didn't you sell when you were up? What was the issue? And these are things that I think as a trader you really got to understand. And sometimes it could be due to just being greedy. And even when you guys are tracking your trades, another thing to keep in mind, because I was noticing some members that did post their trades in the recaps, separate your swings and your day trades. Your stats from your swings and day trades are always going to mess you up, right? Like I said, just always make sure you're separating those stats, right? Now I'm going to go over some members that had some questions and posted their recaps and just kind of dive into that. And if you guys have a few questions at the end, I'll go over some questions as well, and we'll kind of take it from there. All right, so let's go over some of these trade recaps, right? Now, with the first member, like I said, the issue that I saw here was this member is combining a lot of their day trades and swing trades together. I think even on a trading perspective and on a tracking perspective, right? Even on your trading account and tracking, please separate all your day trading names to your swing trading. Like, separate them. If you combine them, it's going to mess up your tracking, and it's also going to mess up your trading. I've seen it happen countless times where someone is in a swing position, they're up 2K, but for the day, they lose 600 on their day trading stocks, so they look like they're up 1,400 for the day, and it just mentally becomes a lot easier to deal with. You're like, oh, it's okay, I'm up for the day. And then vice versa, if they're down 2K on their swing and they're up 600 on their day trade, right? It'll be like, okay, I'm down 1,400 for the day, and then psychologically it messes up your swings and it messes up your day trade. So number one, separate that. Now, the other two members, I know a few people posted this. Everyone hasn't posted it yet, but I do recommend everyone to do it and post it here, and I will go through them. Now, the second member, same thing with this member. Now, the interesting thing about here, what they've stated is they have stated that they actually knew that this was a day or a month to protect capital. Now, knowing that, I think, is very, very important. So when you go in this account, the first thing is same thing. I think you should not have your swings combined. You have your swings here, great. The reason I don't think you should have your swings combined, because it's going to mess you up. You shouldn't even have it on the same screen, right? I think you should separate it just to kind of allow yourself to see, what happens, how things adjust, how you're trading, and how you're kind of managing that. Second thing, tracking days like this. I think seeing something like this, right, I think is very, very important. For this member, they've stayed cash a ton of times. 1, 2, 3, 4, 5, 6, 7, 8, right? I think that's very impressive, especially when you come off a very interesting month like the month of February, where I think there weren't as many plays. I don't want to say there weren't plays at all. It was just a tougher market to trade. Now, I know some people were green, which is great, but overall, it was a tough month. And there were days where, yes, there were opportunities, but I think the opportunities were way harder than usual. Okay, so now having days where you didn't take a trade and know there's no plays, I think it's very important. And also knowing days you missed a trade. Now, that's another thing I think some people don't really track, and I think people should be tracking. Not to really get in your head about stuff, but I think it's more so to kind of put things into perspective. If you guys remember yesterday's webinar, I spoke about DraftKings, right? So I just want to show you that. I spoke about DraftKings yesterday. This was a trade I missed today. I put in the daily recap too. I missed this trade. I think this was a very, very good setup. you go into yesterday, and I let me just kind of recap this and show you why it's important to look at trades that you missed. So when I was recapping this, one thing I said yesterday on the webinar was we saw a lot of relative strength, and this name really held despite all the craziness that was happening, right? I think the hold on this name was very impressive. The fact that we're still in the 60 range or 58 to 65 range, I think was very impressive. And you guys have to understand market conditions. Market was selling off. So seeing that showcases that DraftKings has had a strong relative strength. Going into any day where the market potentially bounces, we could see all the names that have been showing relative strength to gap up and go, right? Snap didn't really make much of a move, but if you go into, let's say, certain names, or actually let me go into the market. You go into the overall market, you can see market bounced pretty strong today. Right off the 380 that I spoke about yesterday, we kind of gapped up a little bit, and we're holding nice. We're still in range, but we had a strong day. So names that kind of present a strong relative strength during weak market days can really rally on strong market days like today. Now, looking at this day, we also had a catalyst. We had an upgrade pre-market. Now, when you go in the open, and these are plays that I really like playing, you got an opening gap right at 62, rally into 65s, a lot of consolidation, accumulation around 65s, and then you start seeing a slow move. Now, I didn't take this trade only because of the market. I didn't like how wild the market's been, and I didn't want to get caught up in a sell-off. But if you exclude that, this worked out perfectly how I would typically trade it. Look for a trade around 64s, put a stop around below the stop, about 1.5 points, a point down, and ride out a momentum name towards the upside. And if you look at this, this is kind of what happened midday, around 8 a.m. as well, 8 a.m. Pacific time. So you got the nice 4.5 point play on this that really formed pretty strong. So I think this was a strong play if you look at it from a day trading perspective. I missed it, and I don't want to say I missed it. It was more so where the market conditions for me did not align. Now, that's very important to do because it goes back to the point I made before on watching film. The more film or the more trades you recap or you watch, even trades you didn't take, you'll get more comfortable with plays. Now, if this was a day when the market was strong and we saw some relative strength and some volume in the market, I think this could have been a very strong trade for the day. But, you can even see the choppiness in the price action, a lot of wild action even on the 5-minute, very tight and suppressed action. So that's where things kind of became a little bit hard for me to kind of execute on this trade. But I'm bringing that up because when you guys go over trades that you missed, like this member has, I think that's very important. Only because it allows you to see what did I miss. Okay, I missed ZM. Okay, what happened? Like, what did I miss over there? Same thing here, miss Z. What did I miss on it? It allows you to kind of go in and learn from that, learn and see that exact setup that you kind of had a feeling was going to happen or you had a good game plan on, but did not work, right? Then same thing going on into, your trades. Now, this is a good example of also looking at weekly trades where, from my opinion, I think this person is trying to adjust their trades and just kind of get trading going well instead of trying to say, I'm trying to make a ton of money, right? And I think that's the right approach to go about things, because if you dive into saying, I want to make a ton of money, it's going to be hard for you to kind of find that edge. Now, a few things that I would do, like I said, in this situation is go into, the same stats of winning days, losing days, average winning days, and just kind of dive into that and break that down. And like I said, the interesting thing about Nat right here was he was able to adjust that there weren't a lot of opportunities, and coming off a hot and exciting January, he scaled down, and I think this right here is very impressive. And this is what I was talking about on the first week of January, where, when you're taking on some trades and you come off a hot hand, and I've seen this happen with me too. Whenever I personally come off a hot hand and I'm trading very well, I'll take time off. I'll size down heavy, because yes, take advantage of the opportunity. But what happens is if you're unable to control that hot hand, sometimes you get ahead of yourself. And on a month where you should either be flat or barely make money, or even if you make money, you end up having a big drawdown, And like I said, out of 12 months, and you guys are going to see this, we'll see like 3 or 4 months that are good. Like you'll see 3 or 4 months like January. And those are months that are going to make you 70% of your money. And then the other 30% or is going to come from months where you got to stay alive, or months where, you know, you have to preserve capital. And I think seeing that, or seeing someone being able to pick up on that, is very, very interesting, and it's very good. You know what I mean? Same thing going in here, saying I think my win rate was a little lower than I would have liked, but especially because I tried hard to focus on only good setups. Win focus, in my opinion, guys, as I said in the beginning, is not a big thing. I think that should be the last thing to focus on. Other aspects of trading, I think, are more important and should be focused on number one. You know, one thing with all these trades, I would recommend looking at how much risk did you put out? What was your actual risk that was put out, and how that was managed, right? Then going on here, another member talking about risk reward ratio was the big focus this month, and that actually helped. But then the key thing here was, yes, they were green, they stayed alive. And like I said, I don't care about the profits. You know, I think focusing on the profits and all that, it becomes more of, you know, oh, look how much money I made or how much I lost. I think this is very, I like this a lot, because this shows right away this member doesn't care about making money right now. And I think that's the right approach, you know, because as a trader, I think one thing that a lot of people do is they try to take a shortcut. They trade, they watch a little bit of videos, and they jump right into it without the proper training or proper education or the proper time needed to actually add the good amount of capital that they should add. So I think when they trade and they burn through money, that immediately messes up your psychology. It also increases, in my opinion, your time frame to actually become successful in trading, because this moment, 1 month or 2 months of how much ever money you lost, also affects your, you know, emotions, and also affects your psychology, and also affects your mental state, and coming back from that becomes harder. So the interesting thing about here, like I said, is this member isn't really caring about profits at all. It's more so, okay, when am I winning? What's my setup? You know, key level bounce after taking profit. Now, the only thing I would recommend, I don't know if you are doing this, you know, the only thing I would recommend is identify the market conditions on these days, right? Identify, okay, these are trades I've taken. What are my market conditions? You know, did this trade work? Key level bounce after profit taking. After profit taking happened, what was the setup on this? What was the market condition? What did the market show? How was my day that day? You know, how did I trade as a collective full day? I think diving into that is gonna be very helpful. And like I said, going into this, 26 trades, 14 wins, 12 losses, average win, average loss. That's a big red flag. Biggest win, biggest loss, same thing. And like I said, the dollar values don't matter. I don't care about, you know, these are just numbers. In my opinion, these are just numbers, because once you get to a higher state, let's say that higher state ends up being you adding more money in your account, this becomes $196, $193, $516, $5,016, $50,016. Like, the numbers increase. You know what I mean? It's just that all adjust, but it comes down to looking at these stats. Going into these stats right away, right, as a red flag is, you know, great. Your win percentage is phenomenal, right? A lot of people focus on win percentage. The win percentage here is above 50%. That's great. But like I said, that doesn't matter. Your average win is $1.96. Your average loss is $1.93. You know what I mean? Like, when you look at that, it's like you can have the best win percentage, but you're not going to make money. Same thing with your biggest win and biggest loss, right? And then green for the month, great. You ended up being green. I don't know how you ended up being green. Okay, yeah, it kind of makes sense a little bit, yeah. But still, these stats right here, when you guys go into these stats, your average win and average loss, there should typically be a 2-to-1 gap on that. You know, if your average win is, let's say, $300, right, your average loss should be about 150 or below. I think that would represent a good stat. Same thing on biggest win and biggest loss. Like, this could be consistent, but you should not have a huge loss. And then I think once you manage that and you manage how much risk was put out, I think then the win percentage kicks in. So I think with this example, for anyone that has something similar, what I would do is I would go through every trade and see how much risk did I put out. You know, all right, great, I made $2.38. Like I said, all that doesn't matter. Same thing when someone trading at $200, $300. But how much was I risking? Was I risking $1? Was I risking 2 points? Was I risking half a point? You know, where is my risk perspective? Where's the market perspective that actually aligns, or, you know, doesn't align? That doesn't make sense. You know. Now I'll go over certain questions that you guys have. So if you guys have questions, I did not see any questions here. I don't know if you guys posted it somewhere else. I told you, I said even yesterday, you guys can post it on the members journey component. If not, I didn't see anything, but you guys can post any questions and I will take it from there. So the first question is, how do you determine when to increase trading volume? Okay. Like I said, it's not. I know a lot of people focus on volume, when to increase volume, and that. But I think size in trading, in my opinion, comes down to the cash amount put out. It's not really volume, because I can go out and I can say I typically trade 500 shares of a stock. Yeah, that's great, but 500 shares of Amazon is very different than trading 500 shares of SOS. So kind of focusing in on one or the other doesn't matter. It depends on the actual cash amount put out. And also with that cash amount, it comes out to how much risk is put out from a cash perspective. So if you put in 50K into a trade and you're risking 10K, right, which is 20%, that's, let's say, scenario number one, which should not be happening. Then you take scenario number two, where you're putting in 40K, but you're risking about, let's say, 1K on the trade. These are two different trades right here. This one's going to be a little bit more reckless, more wild. Not saying, I'm saying you should not be taking this like trades this crazy, in my opinion. Then here, this is more conservative. Great, makes sense. Risk size is also relatively very similar. Not even risk size, the total amount of cash put in or the capital allocated to a trade. So I think these are two things that should be focused. And when you are increasing size, I think you should stay consistent with one size for a few weeks and showcase, results. I think up until you can showcase results, I don't think you should increase size. I think a lot of people jump into increasing size, but I think if you don't have the answers to all of these things I kind of laid out, size should be the last thing you should be kind of worried about. And I know people want to increase size because they want to make more money, and I get it. Makes sense. But with increased size, if you don't have the proper foundation, you can also have big drawdowns. Next question. How do you get out of a losing streak? First thing it comes down to, in my opinion, is why you're in a losing streak, right? Try to identify all the trades you've taken. I think if you ever come through a wide drawdown, just reset, right? And that reset starts off with analyzing all your trades, analyzing what you can do better, sometimes you may not know it. Sometimes it's like, I don't know what I can do better, and that comes from February. I know a lot of days in February, we had a lot of chop, a lot of crazy price action. You're like, wait, I'm trading right, but what can I do better? And in times like that, in my opinion, the thing you can do better is just stay cash. Don't trade, right? Don't take on a position. Then a second thing is, when you do come back, from that break, be it a few days, whatever the case is, I think your size needs to go down. If your average position is 2K, keep your average position maybe 1,000. Now, I'm not saying go super down, because if you go from 2K to $200, right? If your average position is 2K and you go to 200, you're not really going to care about the 200. So you need to keep that position size down, but keep it relatively similar. Maybe size down 50%, but don't go from 2K to $200 on a position. Next question. Should there be a different R calculation for those that primarily scalp compared to the longer day trading, sub trading? No, I think from a scalping perspective, getting the R calculation becomes a little bit difficult. Yes, I agree. But you need to, before you get into every trade, you have to see how are you following that R calculation or R multiple. That's number one. Because if I scalp, and I know for scalpers, this happens a lot. Let's say I go through 10 of my scalp trades, and on average scalp trade, I'm making, let's say let's go in percentages. I'm catching a 7% move on average. All my wins are 7%. But then when I go on my losses, I'm noticing a 22% loss. I'm noticing a 30% loss. Now, right when I see that, my first thing should be, okay, I see what's happening. When I scalp and a trade goes in my favor, I take profits. When I scalp and it doesn't go in my favor, I end up holding. So these things should be tracked, and the R multiple kind of helps you, where if your stop is here, and you actually sell at this point, your R multiple is going to be -1R, which is good. You want to see -1R. You don't want to see anything above that. But now if you go here and you see -3R, you're like, okay, like that's a problem. Like I'm losing 3 times as much as I anticipated on losing. And then that becomes an issue where you're, typically, in my opinion, you start holding certain positions, and especially losing positions. And if you get to a point where you're holding losing positions, that becomes a very, very, very difficult task for you to do as a trader, you know? Based on your experience dealing with other traders, how quickly have traders that journal build good habits from the start become consistent compared to those? I ca- like I don't know one trader personally that is successful. And when I talk about success in trading, I just want to be clear on this. I'm not talking about having one good month or two good months. I'm talking about one full year. Like I'm talking from 2020 January or the whole 2020 till the end, that person is doing well, right? Who doesn't journal? Like I personally don't know anyone, right? From all the traders that I know that are doing well, they journal, and journaling, like I said, doesn't have to be complicated. It could be as simple as you just getting a notebook and writing stuff down, and going back to that, and going back to your habits, and keeping a consistent routine with that, right? Now, how long? I think that's a tough, like it's tough to answer that because everyone has a different journey. Like for me personally, it took me 2.5 years, but I didn't even start journaling until a year and a half in, probably. Like the first year and a half about, I did not, like I never journaled. I kind of started journaling the first year in, but I was never consistent. And then the year and a half is when I slowly started, journaling, and I started picking up habits and started understanding, my mistakes. Going on to certain traders that I've seen, Jay, for example, I know he traded for 7 months straight, kept losing money, became consistent on month 8, I think, or 9. Albert, he was consistent his first year, I think after 3 or 4 months. Then there's people, it took them a year, took them 2 years. So it kind of depends on you. But I think if you start journaling and you start becoming more aware of your trades and more aware of what you're trading, how you're trading, your setups, and when to trade them, when not to trade them, and you know your kind of system and you know yourself, I think you honestly will cut down your learning curve by like 80-90%, no question about it, because you're gonna learn things so well. Like for example, right? Like I noticed this thing that happens a lot where certain people go into trades, and most of those trades are bad habits. Oh, I saw someone else buy this, so I went and I bought it. I made money. Well, guess what you did? You made money, but you also formed a bad habit. Now you're going to do the same thing, and you'll realize that most of the time that's not going to work. Not saying that the trader you're following or the trades you're copying aren't going to work. It's more so that trade is not going to align with your plan, and it's going to just make the whole process very sloppy and messy for you. You know what I mean? So that's where it comes down to following your habits and not breaking them. Because if you can break, your plan this day, who's to say you're not going to break it when things start going messy? So that's where that consistency of following your plan, in my opinion, really, really makes sense. Next. I'll go over 5 more questions, and then I'll end it from there. How do you determine when to take profits? How to let winners run? I'm scalping with just one contract right now. Right now, in the future, I'd like to ameliorate you and sell half at a certain levels, but for now, should I just take profits at a predetermined risk or reward level? Okay. Yeah, I think with one contract, it's a little bit harder. But me, typically, a lot of times when I'm in a position and it does very, very well, I would sell half, or I would sell 1/3 of my position. The reason I do that is because I found out, and this all comes back to journaling and analyzing my trades. I found out when me personally, and this also applies to a lot of other traders, is when you actually exit your position and you take off size, it becomes a lot easier to manage. You also locked in profits, and it doesn't become as stressful, opposed to you trying to capitalize on a position from bottom to top 100%. Because if you try to capitalize on something like this, you have to understand it's not going to go up perfectly straight. It's going to take hits, meaning a trade's is going to do something like this, right? And on every drawdown or every pullback, you're going to panic. But if you start scaling out, you'll allow one of that position to really ride out, right? Determining profits, and that comes down to price action, comes down to number one, what's your trading strategy. If I'm a scalper, I'm not gonna look to get into a stock at 10 and get out at 13. That's too wide. I'm looking to capitalize on a few cents and kind of factor that into options and make a 10 or 5% or 15% return on that. And if it doesn't work out, I know what level I'm gonna exit and why. Right? Okay. Maybe I didn't let the candle close. Maybe I didn't see what I wanted to see on the tape. So, you kind of start adjusting with that. But most of this comes from price action and, understanding your trading style. If you're a scalper, if you're day trading, if you're swing trading, what are your levels? Obviously, if you're swing trading, you're not going to buy a stock at 30 and put a stop at 29.9. Like, you're not going to put a 10% stop, especially if a stock already has a 20-cent gap in the bid and ask. There's a wide spread. There's no way you're going to get away with that. And these are things you guys are going to pick up with experience. What are some things you add in a journal? Behavior patterns, emotion patterns. Yeah. So I think for everyone it's a little bit different, but I'll give you an example for me. I noticed a long time ago I used to really do bad on Mondays, and when I really went into my trade, and this is where you kind of have to be a little bit creative. I realized I started doing bad on Mondays because, and this is after kind of going through like 6 or 7 weeks, you would have Saturday and then you would have Sunday, you would have a long weekend, and then Monday would be the beginning of the week. I would typically start off very aggressive, right? I would size up. It's a new week. So typically my size would increase and I would be red 90% or 95% on Mondays. So when I went into that, I was like, okay, my average size on the day is, let's say, 15K. On Mondays, I realized when my size goes to 30K or goes to 25K, right? Immediately, I'm like, okay, I'm trading with big size. Why am I trading with big size? Okay, I get why I'm trading with big size. I'm trying to start off the week big. Same thing when I'm on a losing streak, right? What happens to my size? When I'm on a losing streak and I go on a 2-3 day or 2-3 trade losing streak, what happens to my size? Does my size start increasing or does my size start coming down? Right? So I think, those are key important elements to kind of track and analyze and understand. Just because if you're not able to identify that and really put what's happening in your personal life into trading, you're not going to be able to understand that. And a lot of what happens in your personal life, in my opinion, is going to carry over to trading. So if you're dealing with problems here and there is a lot of noise and messy stuff going on here, you're not just going to be able to come to trading and make a ton of money and then go on, with your life. You need to be able to learn how to manage both and kind of keep things settled here. And if things aren't settled and it really affects you as a person or as a trader, this is where either size needs to go down or you need to take a break. All right, this is a good question. All right, so can you go over your thought process when something happens and you're in a trade, but something you didn't plan for happens? What are some things you do to adapt to intraday? So that's number one. That's a great question. Now, depends on the trade. There's from swing trading to day trading. Swing trading, I might be in a position overnight, some bad news kicks in, stock gaps down, and sometimes, this is part of trading where you wanted to cut your losses at 10, stock ends up going to 7, and gaps down. That's the risk that comes with swing trading, especially when you trade names like SOS. I know that. From a day trading perspective, sometimes you might see, and you guys have seen this crazy wicks on scalps where, a candle just dumps. Now, when that happens, you have to be super reactive to be like, okay, the candle just dumped. Number one, sometimes if I see that happen, I want to wait for the close. I always want to wait for the close, especially if I'm trading on the 1 minute candle. If I wait for the close and it pushes a little bit down more on that close, I'm out. I'd rather be out and reassess my position than to hold through that. Now, I know some people tend to hold through situations like that because they have a cash account and they're not going to have buying power anymore. And I think that's not a good way to look at things, because if you do end up holding on to a position where you could have maybe lost 7% or 5%, you hold on to that position because, I'm holding on to, I'm not going to have buying power anymore. You immediately make bad habits and now you're down 20%. And that's only 20% if you end up selling, right? And that's for option traders. If you're not an option trader, I think it becomes very, very tough. Someone asked, when is TradeZilla going live? Hopefully by this month. I wrote in the chat today too. What I noticed that happened was there was a lot of issues with with tracking, and a lot of other programs out there have a similar issue, but I don't think you guys, or like anyone that's not familiar with the backend, is going to realize that. But there's a lot of like tracking issues with volume, tracking issues with inconsistency on getting in the proper times, proper exits. So I think what we did, or as a team, is we just kind of went back to the drawing board to fix that underlying issue. And if you go into the other platforms that are out there that do track stuff, and you know, some people have also, the people that have been using it for a while, they have similar problems, and I didn't know about those problems until we started testing. So we're going back and fixing like the full data point to make sure the reports make sense, because I'm pretty sure some people that are using other platforms, when you go into your Thinkorswim or your trading platform profits and you look at the profits on the platform, they're not aligning, you know. So we went back to fix that, because we didn't know there was going to be inconsistency in platforms and time zones and all this stuff. So it's just kind of refixing that up, and you know, we're at a good pace. So I would say like 99.9% by this month we should be good to get you guys in. Next question. All right, I'm gonna end it off with this question right here. I'm always late to get in. How can I figure it out? I mean, it depends. Like, see, this is such a broad question, because okay, you're late to get into a play, but it comes down, did you have a setup? What was your buying signals? What was your selling signal, right? What was your signals for the trade? Did you even have a signal that told you to get in? Or are you seeing the stocks just picking up and you wanted to buy it for whatever reason, and now you're like, oh, it's too late? So it's very hard for me to answer that, because you know, if you, in my opinion, if you have a game plan and you have your entry signals and you have the reason to get in, and you're not getting in when you should, and the stock ends up going in, and you're getting in too late, then you're having execution problems. But if you don't have the answer to these three, then you're just kind of seeing something make a big move, and you're like, it's too late for me. You know, so I think that's when it's time to go back to the drawing board and kind of take it from there. All right, with that being said, I'm going to end this webinar. Thank you so much for joining, guys. I will post this link in a bit. And once again, I highly recommend everyone to go back and recap their trades and recap their month. And you know, if you just started, start focusing on these metrics and make it a habit every day. Spend about 30-40 minutes on this. And I promise this is going to benefit you more than sitting in front of your computer for 8 hours. So if you are someone that sits in front of your computer from market open to market close, end after 2 hours and spend the other hour on journaling. And I promise you, in 3 months, 4 months, you're going to start seeing so much and learn way more than you would by just sitting in front of your computer. With that being said, I will see you guys on the next webinar, and I hope you guys have a great day.